With geopolitical tensions taking a little break and markets bouncing back from recent lows, this week could bring some fresh clues on inflation and risk. So here's what every trader should be watching across FX, indices, gold, silver, and Bitcoin. Let's keep it simple and fun. So the broad market drivers are setting a cautious but hopeful tone for the new week. The volatility index, that fear gauge, has calmed down a bit, which means investors are feeling less scared. Taking a quick look here at the VIX. On the right is our daily, on the left is our smaller time frame, usually 4 and 1 hours what I do. But you can see we have pierced through and closed below 20. So that's a nice little drop on the fear gauge. 10-year Treasury yield is still hanging near the recent highs, showing that inflation worries haven't quite gone away just yet. Crude oil pulled back some from its spike, but is still trading, fairly high of late. It's like that noisy neighbor who won't fully quiet down. But these three gauges together tell us that the market is feeling relief from the ceasefire news, with ongoing worries about higher costs. Not a full party mode, but things feel a little less stressful than last week. Turning to the FX majors, they are still holding steady with some small moves. The U.S. dollar is taking a pause after getting stronger lately. You can see we are below the 100 level towards the latter part of last week. The Canadian dollar is moving modestly higher, helped by steadier oil prices. You can see here we have been up fairly decently over the last week and a half or so. And the euro, as far as the XE goes, these are the currency indices, by the way, I'm showing you guys. It is pushing a bit higher against the dollar as safe haven worries are easing. British pound is also up modestly, supported by reduced tensions over in Europe. The JEXI, the Japanese index, remains under pressure from some high energy import costs, as you can see here. And my favorite, the sexy, the Swiss franc, I just like saying that, is trading relatively unchanged, still acting as a safe place during uncertainty. The Aussie dollar is modestly higher thanks to some stabilization in raw material prices. And the ZEXI, which of course is New Zealand dollar, is following a similar path, gaining a little ground on improved risk movement. But in short, FX is reacting to the ceasefire news as well as sticky inflation. Just taking a quick look at the major currency pairs themselves, you can see the AUD/USD again pretty well going sideways, currently at 0.7050 is the level that it's at. Euro dollar, you can see there where the euro has taken advantage of a little bit of the US dollar weakness, climbing higher, getting closer to some overhead supply zones I'm looking at. British pound, same thing, did take advantage of some dollar weakness, and it has had a little bit of a relief itself. Overhead supply is still quite a ways away. Kiwi dollar, you can see there we're trying to chew through all this nonsense to the left. 0.5832 is the current level. This is obviously before the Sunday open here in the U.S., guys. Still a couple hours to go until that happens at this moment. Dollar CAD at the 1.38 level, pretty much the round number. Again, Canada just kind of taking advantage of a little bit of the dollar strength. And finally, to round out the major currency pairs is the Swissy, the dollar Swiss, currently at 0.789 area. After a few days of consolidating after that big strong drop that we had earlier in the week. As far as the U.S. indices, they of course bounced hard in recent days towards the latter part of last week, and had one of their best weeks in a while, I gotta say. This rally is of course coming from traders buying the dips, especially in tech stocks. More stocks are joining in the move higher, which of course is a good sign. There's your S&P, there's your NASI, and there is your Dowie. Just keep the rhythm. Gold and silver are mostly flat to a little lower after rising on safe haven buying. They're cooling off now that tensions have eased a bit, but they still act as protection if things do get crazy again. You can see right here we got our gold chart again going sideways. We did bounce into a recent supply zone back on Tuesday, so we're just kind of squeezing ourselves in nice and tight there. Taking a look at silver, kind of the same thing, although it's had a little bit more established higher highs and higher lows, but it does have this overhead supply zone at the 78.5 level to start worrying about here shortly, as far as bouncing and possibly pushing further down, or just taking a while to chew through it. We shall see. Bitcoin is moving. It moved pretty well sideways towards the latter part of the week. Of course, this thing over the weekend did get a nice bounce higher up, closer to 74,000 level. It's dropped currently at about 71,000. So Quite the downwards move since about midday yesterday on Saturday. Currently kind of bouncing into a little bit of a demand zone. I was keeping an eye on this 30-minute demand zone over here. We do see we had a lot of trading activity as far as the as far as the volume spread analysis indicator here, helping me to see volume, higher volume, ultra high volume, that kind of thing, which also coincided with a former resistance turning into support. So it's going to be interesting. Bitcoin is on my bullish list, so I'm kind of curious to see if this might push price back up and chase down a higher up supply zone. We shall see. So a little bit on the thinner liquidity side right now on a Sunday. I'm not sure I want to be getting into this trade just yet, but we shall see. The evening is still here. But yeah, it's of course showing this strength as overall risk appetite is improving, but it still follows what the stock market and liquidity are doing. So keep that in mind, guys. As far as geopolitics go, the 2-week ceasefire between the U.S. and Iran is still the big story, of course. And markets are watching to see if they can reopen the Strait of Hormuz. The ceasefire has helped calm fears and fueled the stock rebound we saw last week, but it's still shaky, okay? One bad headline could bring this drama right back. So, think of it like a tense game of chicken. Everyone's relieved for now, but nobody's fully relaxed, especially after Vice President J.D. Vance heading to Islamabad over the weekend. He did meet with the delegates there of Iran, along with Pakistan as the intermediaries, or the referees, if you will. So they cussed and discussed for 21 hours, and they left the country, both of them did, without a deal. So it all really hinges on the nuclear abilities. It sounded like they got most of everything else pretty well squared away. It's just the nuclear abilities of Iran that was the final hang-up from what it sounds like. So not a good thing. Okay, that's obviously not a great news to hear, but sometimes it takes multiple meetings like that to get something squared away as far as a deal. So it's just going to be interesting to see if we do get any more bombs thrown in each other's direction. I mean, we're still within the 2-week ceasefire period, but who's to say somebody doesn't break it? So we shall see. But other than that, geopolitically, President Trump did say that he was probably going to introduce a blockade in the Strait of Hormuz. Not necessarily to punish the UAE, Iraq, and all those other countries, but it should really start clamping down on the economy of Iran even more, because even their tankers won't be able to leave. So there goes their money. So yeah, a lot of stuff happening. Our U.S. Navy, of course, is going to be the ones doing that, facilitating it, and trying to seek any and all mines, water mines, if you will, that were supposedly sunk in there to blow up ships. So might take some time to get that all figured out, cleaned up. So yeah. Needless to say, we're still hanging by a thread on this ceasefire, and of course, it is keeping traders from going all in on these risky trades. I mean, especially anything tied to oil or energy costs. So definitely keep your eyes on any overnight news that happens tonight going into Monday, because things can obviously flip fast. And on the economic calendar front, for this week ahead, on Monday, we do have existing sales coming in for the U.S. at 10 a.m. Eastern Standard Time. It's more of a medium impact event, not necessarily a high impact red folder event, but that's about the best we get on Monday. And later at 6:20 p.m., Fed Governor Stephen Miron speaks. That's, of course, the Trump-appointed governor to the Federal Reserve. So we'll definitely want to get a readout of that. I'll try to make some shorts out of that as well. Tuesday, we do have the PPI coming out at 8:30 a.m. Eastern Standard Time. This one's important for inflation, okay? So just keep that in mind. And then Wednesday is pretty quiet. But moving on over to Thursday, we do have the Philly Fed Manufacturing Index at 8:30 a.m. Eastern Standard Time as well. So watch for extra Fed talk or housing numbers later in the week on that note. And then Friday is quieter than a titmouse. Overall, the market tone feels like cautious optimism. There's relief, of course, from the ceasefire and the strong buying in stocks we saw, but high oil prices and inflation worries are still hanging around. So it's not full speed ahead risk on wise. It's more like, let's see what happens next, with one hand on the brakes. And as far as actionable thoughts, so this week, guys, stay flexible, If crude oil does calm down and the fear gauge stays low, look for some good spots to get into your favorite trades, but keep your stops tight because headlines can change everything super fast. When you look at your charts, focus on the setups that are showing clear strength. In FX, indices, gold, silver, Bitcoin, definitely wait for confirmation before going big, especially on the ceasefire deal that we've got going on. Size your position small and trade what you see. Okay? Don't force anything. Let your prices come to you. Trade smart, laugh a little, and we'll check back in later on. Remember, may your stops never be hunted.